Good morning, Simon Thomas here at Ridgefield Consulting with
Helen Thomas of Blonde Money.
And you may have by now seen us before, brother and sister. Obviously Ridgefield Consulting is a firm of chartered accountants, and Blonde Money
does macroeconomic advisory work. We are based in Oxfordshire.
Offices, main office Oxford and also in Henley.
Yeah, and we cover anyone and everyone all over the world, to be honest, who's interested in UK. UK politics is our focus, which is why...
That's why you're here.
That's why I'm here. Why I've been drafted in. Because there's a small matter of an election happening.
Coming up. So we're going to just do a quick, 5 minutes over the next few weeks of perhaps key issues we think may be coming up to discuss.
Yeah.
And I think for this topic we're going to talk about capital gains tax.
Yeah. So at this stage in the election campaign, I mean, if you're watching, well done, because there's been a hell of a lot of noise going on. But one of the key topics is tax. And Rachel Reeves, who is currently the Shadow Chancellor, but of course going to most likely be the Chancellor come the 5th of July, after the election when Labour win, she has been talking about the taxes she's not going to raise.
So that's national insurance and income tax?
Yeah.
They're a given, but apparently no
yeah,
raises
she's
there.
Committed to no change there.
Now, has she mentioned VAT? Because I was just going to have a look
She
at
has.
this.
No,
Right.
she has. But I do think VAT is an interesting one because, they could maybe categorise things differently, and it could be one of these ones where some things come in the scope of VAT, because obviously private school fees are coming in.
Oh gosh, yeah. Well, we got asked that. Well,
we get asked that all the time.
How do I get the money out of the company to pay for the school fees? And now it's going to be how do I get the money plus 20% out of the company to pay for the school fees?
Actually, why didn't you say something about what you tell clients when they ask you that?
Well, not an awful lot. I mean, there are some...
It's basically a director's loan, isn't it?
Well, it is. I mean, there are some very, I should say, when you're very wealthy, you can come to arrangements with schools where you pay all the money up front. But
I think that's a fair thing people should be thinking about.
Where they come to, because the school often is a charity, and there can be arrangements where all the school fees can be paid in one go if you're able to do that over the course of the period of the child's education, and certain reliefs can be achieved, and you may get a discount for doing that. But the long and the short of it is that the money needs to come out of the company, and you've got to suffer personal tax on that, and then the figures are going to go up if all of a sudden there's VAT on it. So yeah, that's going to be a interesting enough, my school, Abingdon, we have suddenly now they're now asking, they're going co-ed, so and we thought, maybe they're preempting that more people are going to not apply to the schools, so they've got to create the remit for more pupils by having girls.
Yeah, so or do schools go the other way and then shrink a little bit, or offer less in the way of services? Because if you think about, when Simon was at Abingdon School, it always actually had brilliant facilities, but does it need another AstroTurf pitch? Does it need a drama studio? This is school's going to have to think. They've got to think about it like a business.
Well, you say the facilities seemed good when we were there, but when you compare them to what they've got now,
no, it's crazy.
It was something nothing. But
so that's a bit,
So that's the only because you've got to remember, most of government's revenues, I think VAT and payroll taxes, they're about 45% of the total tax revenue. So they're always the big ones. And actually, sorry, we've already veered a bit, but we're obviously we don't think on VAT apart from the school.
Well, she's saying she won't. She's saying she won't raise it, but then the question is, could it apply to more things?
More things.
So the rate could stay at 20%.
But there could be more things affected by it.
Yeah. To bring in the scope of VAT.
Yeah. So coming back to 45%, 40% of tax revenues from VAT and payroll taxes, if they're going to then go at CGT because they're not going to do income tax or national insurance. Now, I just had a quick look, and CGT's only 1.5%.
Is that all of what the tax take?
Yeah, it's nothing.
I'm surprised.
It's very. It looks very, very low percentage in a minute. But anyway, so what do they think they're going to do? Maybe align it with income tax now.
That's the talk. That's the rumour. Is that is one way to get more money coming in? Because we should say that one of the challenges for any government is at the moment they spent all that money during COVID, huge amount of debt, got to pay the interest on the debt, but they still want to obviously provide good public services. How are they going to get the money to pay for it? Well, if you're not moving those taxes, maybe bringing capital gains tax up. So where is it at the moment? Just so people know, Simon.
So at the minute, there's the residential rate, which is the worst rate, and it's affected by your marginal rates of tax, depending on what the CGT is. But for residential, it's 18 and 24%, and then for non-residential, everything else is 10% and 20%. So this is if you're a lower rate taxpayer or higher rate taxpayer, and then there's the one-off rate, which is the entrepreneur's relief, which I think is now business asset disposal relief, which is 10%.
Right, and all of those straight off you can see are lower than the 40% tax rate.
Yeah.
Well,
No, but what you've got to see, from my point of view, when I've been looking at this over the years, obviously with the Conservative government as well, auto enrolment, pensions, right? If people are in employment, let's get them on. Let's get them in pensions.
Yeah.
If people are running their own businesses, the auto enrolment really was a way to get small businesses to get people to put into their pension pot,
yeah.
right? Dividend rates. How many years ago did you have to go when dividends for business owners were 0%? It keeps going up. The dividend allowance keeps getting eroded.
Yeah.
The annual exemption on CGT, right, which was 12.5 or something, is now
£12,500.
Yeah, which is not a lot anyway. When you think of selling assets, it's now 3,000.
Yeah,
So
basically
historically,
not very much.
for the owner-managed business, having good rates of dividend tax, having good CGT reliefs, having all the pension stuff didn't exist. All of those things are being harmonised to move the entrepreneur in line with somebody on PAYE.
But that's the question though. That is the key political question: is why should an entrepreneur get better reliefs and a better position tax-wise than an employed person? That is an interesting question. Now, what would you say?
I don't think I want to answer that, other than it doesn't leave you alone. You don't run away from it. You're bearing all the brunt of the financial risk.
This is the argument. The argument is if you run your own business, as we both do, you're taking risks, and you might want to encourage that in your economy. You might want to encourage people to take risks and reward them for the risk by giving them a better tax position versus vis-a-vis being an employee. And maybe it might even be to tempt people out of employment into being an entrepreneur. But then the other argument goes, oh, well, if you're an entrepreneur, all of the benefits, if you can be successful, come to you. So
when you get to sell the business and go to your desert island for 9 months until you get bored and have to do it all over again.
Exactly, yeah, I know. Well, it's an argument. It's an interesting argument actually as to why. When I sat down to start my business, I did not sit there and think about the tax. I thought about what I'm passionate about, which is politics.
Or possibly,
why did you do it?
Possibly, I didn't want to be told what to do.
Yeah, you go. Exactly. You didn't think about tax, though, did you?
Yeah, I suppose the main driver was really. I mean,
the benefit's not monetary, is it? The benefit is freedom.
No. You hope. Although, when you look now, as a byproduct of the virus and the strange, and actually this I think does bother people like me a little bit, who are now, maybe you running your own businesses, is that people that now get to work from home who are employees in their own business, and they do get that flexibility now.
Oh, so
they've actually got a freebie. They've got a bit of a freebie.
Yeah, they've got the security of a paycheck, and they get to be at home and maybe manage their own time.
Yeah,
well, that's an interesting
one.
An
interesting point as well.
So here's the thing, though. So you're saying that even if they did somehow equalise capital gains with income tax, the amount of money it would raise might not be that large.
No, and I do think.
And it might just annoy entrepreneurs.
Yeah, it'll annoy them, and then, like you said, I think it will stifle investment. Going forward. I mean, because remember, CGT affects all sorts of areas. You've got, right? I mean, we just talked about a few things there, but there are other aspects of CGT. So when you one of them is the entrepreneur's relief, but shutting down a company and getting this 10% rate. When you've got large amounts of money that have accumulated in cash, and you might have to do and then there's voluntary liquidation. But if you've got large cash balances and you shut down the company, you can get a very favourable rate. Now we're probably going to see, we're probably already seeing, lots of people are probably potentially winding up solvent businesses because they want to get this rate. They want to get the tax relief on that rate now.
Right. So it could prompt actually more businesses to close.
Yeah. Now,
so it's almost like a perverse incentive.
Before the rates change.
Before the rates change.
And also, the other point I was saying is you've got things like Seed Enterprise Investment Scheme, Enterprise Investment Scheme, so there's SEIS and EIS. Now, there's all sorts of interesting capital gains deferrals of these sorts of things. So, if you sell a house and you don't want to pay capital gains on it and you invest it in a tech company and these sorts of things, there's all sorts of tax reliefs available that defer that gain or mitigate that gain entirely. So there's, as with lots of legislation, there's the headline stuff, but there might be a lot of tinkering behind the scenes. So if they start messing around with all that sort of stuff, you know, and investors, you know, it's often if you invest in renewable energy or specific tech companies that you get these reliefs, you know, it might actually stifle that investment as well.
So it could disincentivise areas that that maybe are, you know, like renewable energy could be a big priority of the government. Thinking about the environment, for example.
I think as we talk it through, there's been this harmonisation of pensions, there's been a harmonisation of of dividend rate tax to PAYE rates.
Yeah.
You know, trying to make all this stuff be the same for whatever reason, and it's like CGT is the last bastion.
Yeah.
It's the last outpost that's there, and Conservatives, to be fair, have been threatening it for some time anyway.
Yeah.
And it looks like with this fact that they're not going to do income tax or national insurance, possibly VAT with the school fees, or like you say, specific types of things. It's like it's the only one that's left that they can go at, and they're going to go at it. Yeah. Labour, that is.
And so capital gain, just to recap, then affects obviously sale of a house, sale of shares.
Sale of shares, yeah. Sale of assets in general.
Sale of assets, including a business.
Yeah, including a business. And again, there's all sorts of little rules around things like, you know, racehorses and fine art and wine and things that you can imagine.
Lots of
Chatels,
Lots of people watching this, I'm sure.
Things up to the value of £6,000 that historically don't really even matter, but I'm sure Labour will chip away at them. So yeah, there's masses of legislation, so there's a lot of scope of area. But will it really create that much more tax revenue when we go back to looking at, you know, how much VAT and payroll taxes contribute to the coffers? So I can't.
Okay. Well,
yeah. On that point.
Well,
on that point, something more humorous and light-hearted.
Well, I don't know if we can. I don't know. You're an accountant. I'm a macroeconomist. I'm not sure we're very light-hearted.
Two things. Number one, for the local district, because we are based in Oxford and Henley, there potentially is a new. Well, there's a new constituency. People should be aware. So Oxfordshire's gone from 6 constituencies to 7. This is a whole big boundary review that's happening across the whole country to try and make the same equal number of electors in each constituency. So, there's a new one called Bicester and Woodstock, which sort of takes in a bit of Ensham and the bottom bit of Kidlington. It's like this. It's quite a. You should check out basically, you know, where your constituency is, because you might have shifted. And Henley's going to be called Henley and Tame. I didn't even know. Well, Tame's already in Henley's constituency. Did you know that? I didn't know that. No. Oh, and here's a funny thing about Henley. So, as you may well remember, Boris Johnson was the MP there many years ago. It's sort of a bastion of conservatism, whereas sort of the rest of Oxfordshire's mixed between the Lib Dems and the Tories. But in Henley, Rishi Sunak recently gave one of his. He was at Leander, wasn't he?
He was at the Leander Club on the river, making a chat, you know, doing a chat with locals and getting around and about. And then in the background, on the river, comes this boat full of Liberal Democrats with all their signs up, basically got photobombed by the Lib Dems in Henley. Which is, do you know what, it's quite surprising that anyone in Henley lent them the boat.
Well, yeah,
to
actually.
do it.
Do you know whose boat that was?
I've no idea, but don't you think that's surprising?
I know, before, we can ask her.
We'll have to ask her around, anyway, there we go.
Anyway, we rumbled on a lot longer than we thought we might with that, but anyway, mainly about CGT and a few other things.
But we'll be back.
A bit of insight, but we'll be back as the week moves on in the coming weeks.
To talk about other policies that affect the world, and we'll be back.
And so, obviously, to get in touch, usual channels, www.ridgefieldconsulting.co.uk and
www.blondmoney.co.uk.
Okay, thank you
for
your time.
Bye-bye.
Bye.